Hello, everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. Hey, that's me, Romulus. This show, once again, is sponsored by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. And, oh, wait, hang on just a minute. Whoa, hang on. Oh, snap, I just lost my button. And Snap just lost their entire future in one trading day. Look, the stock was already down over 50% from its all-time highs. Prior to today, by the way, that's the thing. Prior to today, look at that. Right there, stock down 50% from all-time highs. And then what happens? Oh, snap, down another 40%. What have I been telling you? What have I been telling you and telling you and telling you? Stocks are going back to where they were before COVID, okay? Some of them are going to go back to where they were at the bottom of COVID. So take a look. Come with me. Ready? No, we're still going. No, we're still going. We're still going. So here's pre-COVID right there, January, February 2020. You see the stock is up here in the $18, $19 range. And then all the way up to its all-time high, right up in that area. You see that at $83 a share. Oh, no, I was wrong. It was down 70%, 70% prior to today's slam. So now it gets hit again. Current price, Snap is down 85% from its all-time high. And boy, how long ago was that? September? Not even a year. It took not even a year for the stock to drop over 80%. That is incredible, incredible. Okay, but that's a growing list of stocks that are now fully retracing their moves back to where they were prior to COVID. They're not down there at the COVID lows quite yet. Okay, that's coming. Okay, but Snap right there, trading, you can see below the point where it was right before COVID hit. Another big stock that this happened to recently that I highlighted a lot was Amazon. Amazon trading, as you can see right down here at 2035. And right before COVID, let's see, that's right about in there. Yep, the stock is trading up there at 2166 or so. Not at the COVID lows quite yet, but it won't take much more of a push, will it? Won't take much more of a push to see that thing go all the way back and retrace down to the COVID lows. Now, if the S&P 500 itself, this is the big index, still a bit above, this would be right around 3,400, 3,385 was the high right before COVID crash took place. So it's got a little bit of downside room to go before it gets back to that level. And let alone the COVID lows of 2,200. So a long, long way down to that point. Can it get there? It doesn't even make sense to talk about that right now, does it? Doesn't even make sense. Very premature to have that conversation right now. Right now, the downtrend is still in effect. There's a lot of bounces going on, a lot of volatility going on. The markets are oversold on a short-term basis. You see here, little positive divergences going on a short-term basis, that is. Again, these are bullish divergences that are on a short-term basis. So sure, stocks, they're having these rallies. I mean, here was a couple of days, here was a couple of days, here was a couple of days. The rallies are there, and it's probably not over. It could be today, tomorrow, next week. The rallies are not over. But the downtrend stays in place. And the trading on my behalf of the Centurions will stay the same. We're shorting the rallies, and we just keep racking one gain after another, after another, after another. I was just on the phone with one of my Centurions. We started doing private coaching. Matter of fact, just finished the session today. So we've been doing it for about 2.5 months. And he said in November, right before we started, he was doing stuff that he'd been doing normally, a lot of trading, maybe over trading, maybe looking at thematic ideas. However, when the lesson started and he started learning the techniques and the intricacies of what technical analysis really is, the light just turned on for him. And he said, since in the last 6 weeks, maybe 2 months, he's had an 80% success ratio on his trades, which I don't know if he's ever had that ratio, that level of success before in his activities. And speaking of my Centurions, here is something that was posted on our public Discord yesterday. Again, our public Discord yesterday morning, and you can see right there yesterday at 8:19 a.m. Okay, let's go over sold bounce because, again, short-term indicators are that way. But as this Centurion is demonstrating, clearly some of the biggest rallies are in bear markets with high volatility. Let's see the volume with the market participation come in. So what the Centurion is saying is you can't really believe the rally without that volume. That's one of the key tests that you want to watch for. Let's go Centurions. Romulus' ability to read the market's a champion, leading club Romulus, humbled and grateful for being profitable in this market with limited stress and emotion. This Centurion just so succinctly and perfectly summarized and communicated everything that Club Romulus is about. And this can be for you too, okay? A champion leading Club Romulus. She's referring to me. It's not that I'm a champion. I've been doing this 27 years. I started my career on Wall Street in September of 1994. I was trained by the best. I was trained by the absolute masters. Now you can go all over the internet. You can look at all the other YouTuber, fakes that you want. And I know them, and I know who trained them, and I know who didn't train them. I know that the people who taught me didn't teach them. The people who taught me, people like Ralph Akinpor and Mike Epstein and Paul Desmond, Richard Dixon, Richard Arms. I mean, I knew Richard Arms, as a matter of fact, before he passed away. It goes on and on. Those people who trained me, they were taught by the people who practically invented technical analysis. So I like to say that I'm the grandson of all this. You teach under me, you get to be the great-grandson. The bloodline passes right on. And when she talks about being humbled and grateful for being profitable in this market, let's stop and really focus on that comment for a moment, if we may. Profitable in this market. This is now the toughest market since 2008, which was the second worst year in American stock market history. The average American is now down roughly 25% in their 401k plans. Most of the traders out there are down 25, 30, 40, 50. I've even heard from non-Centurions that are down 70 and 80% so far this year. And this Centurion is clearly stating that they are profitable in this market. And then the last part, which is so critically important, with limited stress and emotion. We're concentrating our cash availability, our cash resources, but also our mental, emotional, and physical resources on areas that can do the most good and give us the biggest return with the least amount of stress and emotional commitment. We're profitable in this market, which is the toughest market in 13 years, with limited stress and emotion. I mean, let all this sink in. Go back and look at any video I posted since the middle of March when I started with Backpack. Watch them all. Every single one of them has been telling you exactly what's been coming. Every single one of them. And I've highlighted different reasons for these, whether we've gone through patterns with the S&P 500, we've analyzed the advanced decline line. I've uncovered and revealed to you all kinds of ancient Roman trading secrets and tips, all kinds. So if you're losing money in this market, I'm confused. Okay. The reason I'm confused is you should be in Club Romulus. You should be a Centurion, because if you become a Centurion, then you will find ways to be profitable in difficult markets with limited stress and emotion, just like it says right there, just like it says. Okay. That's what we want for you. So if the S&P 500 closed right now for the trading day, and there's many, many hours left before that happens, it would be a new closing low for the correction, not intraday yet, but a new closing low for the correction. And you can see the short-term positive or bullish divergences. And this is something I highlighted in my report yesterday, my Centurions. They all know this. Now, these are things that you want to treat with extra caution in bear markets. The ferocity of the selling, the heightened volatility, is just all part of the process. Okay. Eventually, prices will be marked down enough to attract longer-term buyers, and that will turn this entire market around. But until that happens, please be careful. You don't want to get snapped. This is General Romulus, and this has been Trading Secrets with ancient Roman General Romulus. That's all for now.